Wednesday, March 31st, 5:16 p.m. New York time. U.S. stock market as well as the U.S. future markets are closed. We just finished the end of the month for May, and that means we also ended the second quarter of the year. Starting tomorrow will be the new quarter of the year. That means a lot of institutions be adjusting their portfolios to dump losers and buy winners for the next few days. Plus, they're going to have to report their positions they're holding and what they sold. That would be available through the regulatory agency, public record. So let's look at commodities, major commodities. The different categories. You have energy, metals, agricultural. Let's first look at energy. First commodity of crude oil. Each candle is a month. Yep, look at this. We're looking past 10 years of crude oil. There was a low, there was a high for the past 10 years, and it's been higher than that in the past. Zoom in. For the month, close red, lower high, lower low. New low for the year. Yep, new low for the year. So let's move this down. The low of the year is $63.64 a barrel. This is a swing point there, major consolidation. So that's where we are right now. Demand zone, supply zone. This is particularly a demand zone where buyers stepped up in the past. Yep. So we know we're below the low of last year, and we're below, already made a new low for this year. The momentum is to the downside, but see these wicks, buyers stepped in here too. So now we need to find out, and we'll have to sit and watch it to see if we're going to hold this price level, do a reversal back to the upside. But the dollar's strong, and the dollar's also helping keep crude oil low. As well as some people maybe think the economy is slowing down, so that's bringing crude oil lower. Well, don't forget summer months, we have typically a higher crude oil. The energy is in demand. What might be short-term sell-off is the advantage to be buying on the dips. Natural gas, red for the month, did make a higher high and higher low than last month. Yep. So last month was the low of the year. Tight consolidation here on natural gas. Each of these have stock ETFs you could trade. Let's cue in the stock ETF for UNG. Natural gas, that's the stock ETF. So it's showing different. It's showing a new low for the year. First, the natural gas, I just showed you, that was prior month. But again, you might consider buying the stock ETF. Or if you don't want to buy the stock ETF, you could short the put options. And if this goes higher, you make money. But with the options, as long as it stays above your short strike, you're good. Yep. Let's go on to the next commodity. Metals. First look at gold. Past 5 years, that was the high of gold back here in 2020. That was the high of last year, 2022. Down there, it wasn't. And this year, look at that. We made a new high for the year. We took out the high of last year, so now we can move that. That was the high of last year. We haven't taken out the high of 2020 yet, so let's move this up. New high. $2085.4. Like that. There you go. And for the month, not only did we make a new high, we closed closer to the low. We also made the low of break the low of last month. So again, failure to stay up here, just like the past, right? All these times gold tested this area, failed to stay up here. So if you use charting, not fundamentals, but charting, you have been aware this was a zone a supply zone of sellers, not to be buying up here. Nope. Gold is selling off. Let's see if the other metals are doing the same. Silver, yep, same thing, selling off. Lower highs. Metals are not in a demand, at least gold and silver are not. Made a new high, failed to stay up there, and closed below the low of last month. That's silver. Platinum, or is it palladium? Look at that. That yellow candle simply means we didn't take out the high or low of last month. But again, failure to even test the high of last month. Lower highs. Yep. Solid body equivalent to a red. It's bearish. Let's go on to the next. Copper. New low for the year. Broke below this consolidation. Here we go. That was a consolidation. Past several months and broke below it. There, 5.54. Yep, there we go. Copper is what's used in industrial nations. From your appliances, your manufacturing, your automobiles. Such broad use copper is for industrial, and it's going down. Doesn't mean there's less need of it. Doesn't mean less people are buying it. Again, we have strong dollar. So that was one of the other categories. We already did energy. We did metals. Let's go look at the very important one, foodie, the agricultural. Corn futures. New low for the year. So that was the low. And went lower, lower. And look at this. We took out the low of last year. So let's remove this. And this low is now lower. So let's move that down. Corn. Yep. Several things to be aware of. Corn is used along with, or one of the agricultural products used in ethanol. You can use sugarcane, but the United States uses mostly corn. Yep. Corn is also feed for livestock. So as this goes lower, it's also helping reduce the costs for your energy if you're using crude oil, fossil fuel for your car instead of electric, instead of natural gas, instead of water, wink, wink. Okay. Also, corn, like I said, is feed for livestock. So again, now the part of the products for maintaining livestock now has a lower cost. Wheat futures took out that low all the way back of 2021. All the way there. Huge difference what the high of last year was from the start of the extending war in Ukraine and Russia. Sorry, in Ukraine, but from Putin, Mother Russia, to new low. Yep, so wheat, new low for the year. Like I said, took out the low of last year and that year. Nice. Soybean. That. Took out the low of last year as well, too. With that. Made a new low for the year also. Yep, right here. So now this, let's remove it. Maybe it would come down here further. That's soy. Okay, now livestock, live cattle futures. That was the high of last month. So we made a new high. 169.425, 169.725. Yep, new high for the year. New high for the year. Is that right? Sorry, 275. $169.275. better. Huge difference here from live cattle. Over the past 10 years, it's a new high. Doesn't mean they're making record profits. The embedded costs for the products, materials, and labor has brought this up also, which is misleading here is typically when you have energy sources at a lower price, it should be not as this high. Because again, fossil fuels, especially crude oil, is used for everything to transport the materials, the food product here. So why is this still high? Is there a short supply? Is there more of a demand? That's public information. Now, feeder cattle, also new high for the year. Coming back to the highs all the way back here, 2014. Excuse me. Extend this out. Also, that's live cattle nearing the highs all the way back in 2014. All right. And let's look at lean hog. Massive tight consolidation from the end of last year now. Inside candle for the month. Big difference. So we have most of these agricultural products trending down, new lows for the year. But the actual cattle is the opposite. Huge savings still to the consumer because again, most of these are, or they all are priced in US dollar. Okay, that's it for this video.